I've worked in research for more than 20 years, and I think there are three key differences in how we approach research. First of which is how we prepare for meetings with our sources. An analyst generally should prepare for meetings ahead of time. ATRAM research sets meetings to plan meetings. The approach allows us not just to identify the key issues surrounding an investment or company, but more importantly, strategize on how to extract as much critical information from our conversations by prioritizing what is relevant to us and the market. Now, the second difference is our openness to explore new areas of investment research. An example of which is environment, social, and governance, or ESG. ESG is a rapidly developing area of research, particularly because there's a growing demand for it. We have taken the first step to incorporating ESG into our fundamental research and investment scoring, and are committed to developing it to its fullest potential. The third factor is our research. It maintains a very independent view, which means we try to remove as much noise from the market and base our decisions mainly on the evidence we gather extensively, whether it be positive or negative for the company. The team has 4 analysts, including myself. There's only one task: generate ideas for portfolio managers, and by idea we mean stock recommendations that are based on a concept that has not yet been fully priced into our company share price. We're a lean team, but I'd like to consider us also a mean team. Our analysts are essentially industry specialists. One analyst covers banking, another covers property. We effectively cover more than 60 companies in 8 or more sectors. Now, this approach allows us to cover more ground in the market as ATRAM Research looks for the next big idea. Well, research teams tend to be flat because hierarchy in research is really about depth and reach. The average age is less than 25 years, but make no mistake, this young team is very capable and they have the energy and tenacity to either dive deep or go far in search of the ideas that we need. Now, there are many frameworks used in analyzing stocks, but the core framework we use is competitive industry analysis. And since it is a framework, analysts must be disciplined in using this framework. So in a sense, there's a limit to creative freedom. But having said that, analysts are free to apply the framework to any industry. It's that search for changes in industries and the economy that create market inefficiencies that require the most creativity from the analysts. This is where multiple frameworks are used. Well, that's the tricky part, and it's not easy. I guess part of the strength of the research approach is that it clarifies exactly the investment horizon that we view our stock recommendations. Short is short, long is long. We're also developing KPIs that ultimately will specify a balance in the investment horizons of our recommendations with the performance of the analysts.